Welcome back to Multibagger Shares. I'm Manish Goel, SEBI registered research analyst, and today we are talking about one of the single most powerful but most overlooked strategies in modern Indian value investing, the Cannibals Strategy. So what exactly is a cannibal? In investing terms, a cannibal is a publicly listed company that consistently and aggressively eats its own shares. That is, it uses its surplus cash to buy back its own stock from the open market and cancels those shares forever. The legendary Charlie Munger popularized this concept back in 2004. And Manish Goel has been hammering on it ever since. Now, why does this matter so much for Indian investors right now? Because two enormous things have just happened. Number 1. On April 1, 2026, the entire taxation regime for share buybacks in India changed completely. From now on, gains from buybacks are taxed in the hands of the shareholder as capital gains. Just 12.5% for long-term holders, with the 1,25,000 rupee annual exemption. That is dramatically more efficient than dividends. Number 2. On April 2, 2026, SEBI released a consultation paper proposing to bring back open market buybacks through stock exchanges. The combination of these two changes is going to unleash a wave of buyback announcements in the second half of 2026. Let me explain why buybacks are so powerful. Imagine two identical companies. Both earn 100 crore rupees a year. Company A pays out 50% as dividends. Company B uses the same 50% to buy back its own shares. Over 10 years, even if neither business grows at all, Company B's shareholders will own roughly 40 to 50% more of the business than they did at the start, because every year, the share count keeps shrinking. Add even modest organic earnings growth on top of this, and the per-share earnings absolutely explode. This is the hidden compounding engine that the market routinely ignores. But here is the catch. Not every buyback creates value. In fact, most buybacks announced by Indian companies actually destroy value. So we use 4 strict tests at Multibagger Shares to separate the real cannibals from the fake ones. Test number 1. The buyback must be funded from surplus cash, not from debt. If a company is borrowing money to buy back shares, that is not a cannibal. That is a casino. Real cannibals throw off so much free cash that buybacks become the natural sink for excess capital. Test number 2. The buyback must happen at or below intrinsic value. Even Warren Buffett has been crystal clear on this point. A buyback above intrinsic value destroys value for continuing shareholders. Always check the price to book (PE and F by EBITDA) at which the buyback is being executed. Test number 3. The share count must actually be falling year after year. This is the test most retail investors forget. Buybacks are meaningless if management simultaneously issues stock options or fresh equity that offsets the repurchases. Pull out the annual reports for the last 5 to 10 years and chart the diluted share count. If it isn't falling, you don't have a cannibal. You just have an illusion. Test number 4. The underlying business must already be a quality compounder. A buyback in a melting ice cube is just lipstick on a corpse. The business must have strong moats, rising returns on capital, growing free cash flow, and clean governance. The buyback then becomes the cherry on top, not the cake itself. Now let me bring in Titan Biotech. BSE code 524717. Currently trading at 432 rupees with a market cap of 1783 crore rupees. PE of 65.6. ROAS of 16.9%. ROE of 15%. 52-week range of 74.7 to 556 rupees. Now, Titan Biotech is not a buyback story. And that is exactly why it's so important to study here. Titan Biotech is in the capital deployment phase of its life cycle. It is reinvesting its cash into a 100-plus product portfolio, exports to 100-plus countries, and an indigenous R&D pipeline. For a small-cap quality compounder still in its growth phase, reinvesting at 16 to 17% rates of return is far superior to a buyback. The lesson is this: cannibals are the right strategy for mature cash-rich businesses with limited reinvestment opportunities. Knowing when to demand buybacks and when to demand reinvestment is the mark of a sophisticated value investor. Let me also remind you of one very important editorial position that we hold here at Multibagger Shares. Whenever you read mainstream advice about buyback investing, the so-called experts will tell you to diversify across 30 or 40 buyback stocks for safety. This is absolutely terrible advice. Warren Buffett said it best: wide diversification is only required when investors do not understand what they are doing. If you have done the hard work of identifying 5 to 10 genuine cannibals using our 4 tests, concentrating your capital in those names will compound your wealth far faster than spraying it across 50 mediocre picks. Concentration with conviction beats diversification with hope every single time. Today the BSE Sensex closed at 77,550.25, up 1.2%. Nifty 50 closed at 24,050.6, up 1.16%. The Indian market is in the early innings of what we believe will be the next great wave of corporate buybacks. The smart money is already screening for the candidates. The retail crowd will only catch on 6 months from now. Before I wrap up, the most important warning of all. According to a SEBI study, 9 out of 10 individual traders in the equity futures and options segment incurred net losses. F&O trading is essentially gambling. Every minute you spend chasing options premiums is a minute you are not spending on the strategies that actually build generational wealth. Turn off your F&O screen and turn on your annual reports. The Indian investors who built 100 crore plus portfolios in the past 25 years did it by owning fewer than 20 quality businesses for 15 plus years. None of them did it through F&O. To learn the complete 95-factor value investing framework that we use, watch our free YouTube course, link in the description, and join our Telegram channel at Long Term Equity Y for daily value investing lessons. This is Manish Goel from Multibagger Shares, SEBI registered research analyst. Registration number INH 100004775. Thank you for watching. And remember, in the long run, the cannibals always win.